Hello, I'm Bernard Hickey from Interest.co.nz and welcome to our monthly Roost Home Loan Affordability Report, this time for June, which shows a slight worsening of affordability across New Zealand. That's because of a rise in house prices to record highs. Now, every month we put together a series of reports across New Zealand, both for the nation and for individual areas, and look at the elements behind home loan affordability. So that includes the price of a house, what's happening with incomes, what's happening with interest rates. And for June, we've found that affordability has worsened slightly because of a rise in house prices. Let's have a look now at what we see with our home loan affordability chart, which you can see at the bottom of the article under this video. Now, this chart shows you what's happened to home loan affordability over the years in New Zealand, and you can see that although home loan affordability has worsened somewhat, a worsening means obviously an increase, the percentage of after-tax income needed to service an 80% home loan on a median house price for one income has risen from around about 53.6% in May to about 56% in June. But when you look back over the history of the home loan affordability reports sponsored by Roost, you can see that it's much better than it was at the worst period in New Zealand's housing market back in late 2007-2008 when we had near record high house prices and interest rates over 10%. Obviously they're closer to 5% now. So we're actually back at levels not seen for 8 years or so, 2004. That's because interest rates are so low. However, when you look at what's happening to household affordability, and we do reports on these as well, you can see that we're also at a pretty strong level compared to many years ago, particularly for first home buyers. Now, if you've got a household, so that's 2 median incomes for young home buyers, and you're buying a first quartile house, so that's a cheaper house down the bottom end of the spectrum, it costs you in June around 21.7% of your combined after-tax pay. That's down from 22% the previous month, so a slight improvement. And that's all because the first quartile house price fell to $257,000 from $259,875. And obviously in recent months, banks have eased up their lending criteria somewhat, at least from a couple of years ago. So many home buyers can get quite high loan-to-value ratios, in some cases over 90 to 95%. Some banks are competing hard to offer special discounts to home buyers and borrowers, particularly legal fee discounts, in some cases break fee discounts, and according to Roost, it pays to use a broker to work hard with the bank to get the best deal when you're buying a house. Obviously, there's other things to consider when you're looking at buying a house and at the whole home loan affordability equation. For example, how confident are you about your income or incomes? Because obviously, when you're buying with 2 incomes in a household, you want to make sure that no one's going to get pregnant or sick or lose their job or whatever. And secondly, what's going to happen with interest rates? They're at record lows now, 5%. Most economists don't think they'll fall any further, that they're likely to bounce through the middle of next year. And certainly if you're on a floating rate, you'll pay that increase, unless of course you're fixed for a longer term. Well, there we have it, the Roost Home Loan Affordability Report for June, showing a slight deterioration nationally. I'm Bernard Hickey for Interest.co.nz.